We have a big earnings week this week with the highlights being Tesla and Google Wednesday after market close. I like Google. I believe Google is an undervalued stock with great upside potential. I had a Google stock analysis video published May 12th, already up 20% since that video came out. The Google play is simple. The overall market sentiment on Google is negative because of AI competition with Google search. As much as this is a valid concern for Google's moat, Google still has plenty of other amazing revenue streams like YouTube and Google Cloud. Plus, they have Waymo, which performs driverless taxis in select cities well before Tesla's robo-taxi launched. YouTube streams more on TVs than Netflix does. Google Cloud makes roughly the same amount in revenue compared to Oracle. These massive companies that only do one of those things, well, Google does both and more. Google is a revenue monster. The market is scared that Google will be replaced by large language models and AI search. But when Google announced they were investing 75 billion into AI back in February 2025 for the quarter 4 results, the stock dropped. So, which one does the stock market want? Google to not adapt to the changing environment and hold on to the blue link economy? Or does the stock market want Google to invest in AI, expand Google Cloud and take market share from Microsoft and Amazon, expand Waymo and compete with Tesla's robotaxi, expand Gemini to compete with ChatGPT and provide a better search experience for users? I prefer the latter. The stock market needs to make a decision. Do we want Google to innovate and invest in heavy capex, or do we want them to forever stay as the blue link economy? I prefer innovation. Finally, the market seems to have slowly moved Google away from the timeout corner as Google rose 20% in the past 2 months. I think Google's earnings will be good. However, the market can react either way. Google will have to paint a pretty forward outlook and address investors' concerns about AI potentially taking away market share. For the long term, however, Google continues to be a core position for my personal financial journey. Celsius continues to be a stock I sell covered calls against for weekly premium income. My model correctly predicted that the 47.5 and above strike prices would be out of the money by end of week, which became true. Celsius ended the week at 44.43, enabling me to sell covered calls at out of the money strikes to avoid assignment and collect premium. I use historic price action data for popular indexes and stocks to predict weekly price movements, with the main goal selling covered calls for passive income and minimize risk of assignment. I posted a YouTube video about how Moneyball can make you a better investor. It's the first time I covered sports on this channel. I reviewed how Moneyball, at its core, is leveraging inefficient markets to scout for undervalued baseball players. As investors, we are trying to achieve the same thing. Instead of investing in baseball players, however, we are investing in potentially undervalued stocks. I'm super happy with how the video turned out. If you're interested in Moneyball or baseball or investing in general, give that video a watch. Appreciate your support.